Hello guys, glad to have you on board again today. The NFP just came out and it is a pretty fucking big number. Almost 30% or even more than 30% on top of the expected consensus. Even the total unemployment percentage have been dropping down to 0.2%. So we are at historical lows on unemployment in the United States. That's basically the lowest number ever published on this sector. Let's just have a look at this and you'll figure this out. So this is it. That's as far as we can go in here on investing.com. And the actual lowest number is 3.5, and it's the last one recorded out of 1970. So what we're having today is pure and simply comparable to this. We've got nothing else to compare it to but to 1970. Even after the, even trying extremely toward the tech bubble, we just went down 3.8. So this is definitely not what I was expecting. I need to be really honest. I really wasn't expecting such thing. I was expecting higher than expected number. I was expecting something closer to 4%. So we're freaking far from what I was expecting. Definitely, it is a game changer. So we're gonna just dampen the expectation because next month is going to show the actual numbers, so we're going to have to review it. All right, the previous number could be reviewed next month, so this 3.6 is here until it's been reviewed next month. So we'll see, because at this point I'm really starting to question those numbers, but still they are here, and this is what we're going to have to work with until further notice. This number is great. For the US, it definitely means that it can bring some visibility because we're reaching now historically low unemployment sector. And in that perspective, even if I think this number is questionable some way, we're not going to do it. And Wall Street can only take this one way. It gives us a little bit of visibility. We just had the Fed yesterday, and the Fed said we're not going to do anything as well. So we've got 3 months to go with the Fed. We've got probably 3 months to go as well with economical data, unless next month proves us wrong about what just came out in here. But if the number gets to be pushed through and is not reviewed next month, then we need to be honest. The numbers are great, which means the recession, the looming recession, is not here. We might have an additional 1 or 2 quarters before having some other information that may suggest some bearishness down the corner. But at the moment, in economical perspective, nothing suggests any shadows in the sky. There are still some shadows because some side actions are really some kind of concerning, the credits in the corporate sector and things like that. So don't take me wrong in here. There still are problematic sectors in the numbers we're getting here and there, but still the core, hardcore data remains pretty fucking solid. And moreover, I expected a dangerous timing in which we would have been building a solid dip in here. I thought 3.7 will be the lowest we'll ever get down to, and I was just expecting something higher, like 4% this month, and we're totally out of what I was expecting. The global trend remains solidly bearishly orientated. So we'll see how long this can last, but until further notice, we've got a little bit of visibility for Wall Street, which may explain, partly at least, why Wall Street's been so aggressive. So the thing is that now that we have this number, I can somehow make sense to this. That doesn't mean I stand down from bearishness. All I'm saying in here is that if I had those kinds of numbers, if I knew those kinds of numbers will come later, I would definitely have said, all right, there's no need for a pullback out of the bad numbers we had recently. As if I was expecting the core data to maintain the current course, I would definitely say, all right, you know what, instead of doing, remember what our plan was. The plan was basically to do something like that. So to set ourselves in here, and I would basically say, all right, we needed to go lower than that to just flush out the lows and do it solidly to rebounds and eventually make historical highs afterwards. The thing is that, I don't know why, but it feels like some people have been betting those numbers we're getting today were about to come, and it feels like they just said, okay, you know what, fuck off. We're not gonna reverse. We don't need to go there to go there. We're just gonna go straight line historical high, and we'll eventually pull back afterwards before we eventually rebound. So the question is, it is hard to forecast the market right now. Still, for the reasons I gave you earlier, I think that what we're having right now is a very dangerous, complex threesome with the Fed in between. And the market itself has to identify two components. Both the macroeconomic gets pretty balanced. I mean, we do have some shitty news, but also some gorgeous news like the one we got today. So it is hard to process all of this and have a clear sight of what the hell's happening. Soft data is downgrading. Core data remains strong, not to say it's even stronger than it's ever been. So how can you even understand any fucking thing out of it? So I think the market is still lost about the actual macroeconomic conjunctions. The corporate data is pretty mixed as well. We had some good news. We definitely had some good news, but had some pretty shitty news as well. So the thing is that it is shaded gray area right now. We haven't been pricing in any of the dark corners. We've been pricing in all the best, but still there are some really good numbers. So those who thought it was all black, all about blackness and had to crash and everything like that, that's what I thought. Honestly, I thought, and I still think it's going to come, but still, the timing is of the essence right now, and the problem is, as long as we're going to keep on having such kinds of numbers, I think the market will just not give up, not right now. It may take an additional quarters, maybe 2, maybe 3, 4, I goddamn don't know. All I can tell is that this number doesn't come as expected in my plan. It's totally shifting away from the expected plan. So now I need either price to prove me right, and to be honest, the macroeconomics were proving me right back then. The price has proven me wrong. Now we could have just the opposite. We could have macroeconomics proving me wrong about the recession, but still prices going down. Why? Simply because we have a threesome in here, and the Fed is playing in between. If we have solid data, then the Fed will have to tighten the policy. So that's the problem. The market doesn't have just to take care of macroeconomics. We also have to take care of the Fed right now, and as well, this is freaking unable to read. So at the moment, we've had a market that's been taking it all for the best, taking all the good numbers, not the bad numbers, taking all the best from the Fed, not the worst. So we've been pricing all the good. The question is, the good needs to keep on going. If it doesn't, then we might have to retrace or even reverse. So once again, I think it's just goddamn hard to trade this market. As long as we have no volatility, I see absolutely no reason to trade. So I'm still going to forecast this for early next week. To be straightforward, I'm probably going to go straight to my weekend right now and don't give a shit about the stock market, because I don't feel the urgency to trigger a trade on top of the weeks of the weekend and having to hold an overweek trade and anything like that. So what I would say instead is that this is my plan for early next week. All right, we're probably going to get to settle ourselves in there either to terminate the week, or we're going to stay in here and do this on Monday. But anyway, I think this area is going to have to be tested, and I'm going to look out for signal in this area, obviously, 1 hour chart signals. We're just look at the cycle. Right? We're just entering the reversal area. So you can pretty much expect it's not going to be for today. I think there is no rush. I think Mondays definitely be in the next or near this area. So even if the top were about to be just built today out of a V-shaped structure or something like that, we'll still be close to this area on Monday. So sticking in front of the computers for God knows what reason, when everything suggests we might be waiting for Monday, I just suggest I'll be doing this. So I've been putting some alerts, obviously. If we get to trade this price today, I want to be looking at how we'll do it. But if we were about to do it, just imagine what it will look like. We'll just have to go there straight fucking line. So if we go straight line, do you want to trigger a trade? No, we're talking about 1 hour chart. It's going to take a few hours to trigger a trade, probably 4 to 5 hours before we actually build a top. So, goddamn no rush. I mean, move out. Enjoy your weekend, enjoy your friends and family is much more important than trading. The thing is that unless something unexpected shows up and we have a pickup in VIX, all we do have is a VIX that goes back to support areas. And once again, the volatility sellers just got right. It really rips my heart off just to say this, but those fucking assholes who've been selling the volatility, they were right. because for now, we're there and we're still there and nothing goes according to my plan. They've been selling volatility hard once again, and still volatility is goddamn low. We're not yet at historical lows on volatility, hopefully, but the thing is that, yes, they're still handling, and look at that. This is the next market, this is the next contract expiration. No, not on the 10th of May. Let me double check that. Next contract expiration is on the 21st. All right, so I still have plenty of time to go. All right, so this is the next contract's expiration. Lots can go on. Just remember that all we care about is to see and try to figure out if the volatility system goes out of control, which means we'll go once again back to the up top area, and things could start to go ugly if we break it up. And we're going to go straight to the 20 area, which is higher level of sensitivity regarding risk taking. But as for now, what we have is just pure and simply, we could also break down and just die in here once again, 12, and just sticking to historical highs until the next expiration. I mean, if the other numbers that that has to come later will be just as good as this one, then there will be no rush for Wall Street to sell. Doesn't mean that they'll buy. All that it says is that at least they won't be triggering any selling activity. So let it go. Don't try to understand, because I've been clear with this. As long as we are playing this threesome party, it is very dangerous to understand who's going to be the loser out of this, but there's definitely going to be one. It's either going to be the economics, and probably Trump's as well, or it can be the market, or it can be the Fed. But definitely this party is not going to end up well, because it cannot be. Those structures are unsustainable because they're just not stable at all. So it's going to take long, but still all it does is that it makes the overall reading of the market behaviors pretty fucking complex, because the market can make multiple decisions. And like we said, so far the market took the best out of everything. It's been taking the best out of the Fed, not the worst. It's been taking the best out of macroeconomics, not the worst. So are we going to keep on going with this shape? That's the good question, and I don't have the answer. So, not knowing what the hell we can do with macroeconomics, I can see just one behavior to adopt. You just divide your position sizing by 2, because you don't know what the hell may happen, some black swan or anything, just nothing, low volatility. So if you absolutely want to trade, then do it, divide the leverage by 2 and trade only technicals. You'll be aware that at some point some fundamentals might be just shitting on you, and if that happens, then you'll have the ability to take half a usual loss. You will just make few gains, obviously, but remember that trading is more about limiting the losses than taking crazy fucking amount of gains. So all I suggest is that anyway, I myself, I think I'm going to take some vacations. I mean, I've been waiting for 2 weeks to get some volatility, so unless we've got something showing out of nowhere, giving some life back in this market, I just think I'm going to take some vacations, because sitting in front of the computer all day long answering emails, that's fine, yes, but still, it's boring. So I'd rather like to enjoy my time doing something else than just waiting for something to happen. That doesn't mean I'm not going to trade. All it says is that I'm going to take fewer trades with fewer leverage, with lower leverages, and all I'm probably going to do is just as long as we don't get volatility, I'm just not going to be able to speculate. In order to speculate, I need to be able to manage the risk, which means I need to have price movements. And in the short term, all we have is just fucking noise. I mean, just have a look at this. It will pretty much show you what the fuck I'm talking about. Just look at that. I mean, does that look like intraday normal pricings to you? No, it's just nothing. It's just fucking noise. So this is what we might be having all summer long, just dead markets pricing in a 0.5% area. I mean, just that's what we're doing. This looks like enormous. It's just nothing. I mean, you must be knowing that an average ATR for the DAX is 1.5%, which means on a day-to-day basis, we're supposed to trade at least 1.5 valuation of the index. We're trading half of this, and we're not even moving, which means we're just sideways action in the same area, just dead man standing. That's exactly this. So like I said, we have to get to this conclusion. Some people say selling may go away. Yes, it may happen, but only if we happen to have some volatility, because so far all I can see is that the smart money is already out. They have nothing else to sell, so they're not going to sell any fucking thing. So the only thing that can trigger some selling entries is some speculators short selling the market. But as long as we don't have volatility, we can do it. We're just going to try selling the resistance, won't be able to secure on supports, or anytime we secure, it pushes price upwards. So it is as stupid as it could be. But as long as we do have share buybacks, sustained Fed policy and everything like that, just there's nothing to expect. Unless some unexpected catalyst shows up, like, I'm just going to say it out loud because I'm not saying it's going to happen, and I'm not trying to feed some bear traders' mind and everything like that. Just all I'm saying is that just imagine that it's been quite a while since we haven't heard from the US-China trade war. That doesn't really mean that something is up. Some people may see it that way, say, okay, no news is good news because it means the plan is going to come over and we're going to have something. It also means that we could be on a dead end, and just that the final part of the agreement, which is the strongest one and the hardest one to negotiate, then we cannot find a consensus on this one. And if we cannot, then there will be no deal, or there will be a lesser deal. And that will be the black swan for Wall Street, because we paid for a good deal. And if we don't have it, if we have a lesser deal, or worse than that, no deal at all, then that's no good. That's absolutely not good. So we don't know. All I'm saying is that I think any fucking way, macroeconomical data is on one side, Fed is on another side, and we've got a third fucking side coming out of nowhere, which could be this US-China trade war, and the deal that could be coming or not coming, or coming lesser than expected, or anything like that. So we've got too many variables. Far not enough volatility to make any speculative trade, which means, I'm sorry to say this, but at some point in the market, there's just nothing to do. I know you guys think there is always something to do, that we can always trade something. Let me just tell you that you're going to learn this the hard way sooner or later. At some point, what we're living right now is definitely historic, but it's been happening in the past. In shorter periods and shorter time frames. It has never been lasting that long. So it's historically long, but those low volatile systems, they've been happening in the past. And when they happen, generally, either you're trend trading, which means you're in a trend and you just let it go. There's nothing to worry about. But the thing is that what really bothers me is that we're definitely not in this kind of context. We're definitely not trending. We're ranging, and we're desperately searching for a market top. This is dangerous because obviously we're historically high trading, which means it's hard to figure out a goddamn top in a low volatile context. Reason why, if you do it, it's just two sets of options. Either you're going to have to be sell and holding, which means you just sell and you don't give a shit about the timing. You just wait for the market to go down to validate the trade and hope that you caught a good price. That doesn't sound possible to me, simply, but because sell and hold doesn't even make a sense. The other option is just basically you do nothing. You try to trade what you see, but the problem is whenever you see something, it generally doesn't work out because there's not enough volatility. So the only conclusion is that you just take some vacations and move the hell out. Unless you do put some alerts, but until we got something to work with, then let's be honest, there's nothing to do. All right? Wish you guys a good weekend. Obviously, keep you posted about any unexpected rebounds in volatility and stuff like that. But so far, all I can see is that, oh my God, this is just as boring as it could be. So I'm going to stop focusing and losing my time in front of a computer. I'm going to do something else.